Let's connect with Ashi Anand, CIO, IME Strategies with Valcrate Investment Managers. Nice to have you in our studio. Thank you for joining us. I distinctly remember last time when we spoke, you were bullish on Zomato, Paytm, the entire cohort. Now that interest rates are unlikely to come down in a hurry, what happens to some of these stocks? Because they are a function of what happens to the terminal value, which is a function of underlying interest rates. Sure. What happens now?
So what you may have seen, as in you may have seen a very sharp, you've seen a very sharp recovery from the lows. I think that move is probably largely done. Okay. I'm only talking about the near term.
Of course.
Right. So as interest rates now possibly may take some time to kind of cool off with inflation, kind of you start to see oil prices moving back up. You're seeing food prices under some kind of pressure. So the fall in interest rates may take a bit longer, and therefore from a pure technical perspective, it may take some amount of time for these stocks to kind of recover if you're just looking at that core aspect.
Next 2-3 quarters, you think they could move into sideways?
So I think the bigger thing, more than a technical aspect, is what you're seeing happening fundamentally.
Okay.
When we launched our digital disruption strategy, one of the core calls we had taken is that these companies are going to turn profitable a lot faster than what people in the street are expecting. Okay. One of the biggest concerns are, why are these companies not making kind of money? Right? You are very large, you are growing, but why at such large losses? When these companies get listed, they actually move into a monetization phase. And you're starting to see across the board, companies turning profitable a lot faster than expected. Zomato actually turned PAT positive in the last quarter.
For the quarter gone by.
Right? As in it was at least 3 to 4 quarters ahead of expectation. You've seen something similar in Paytm. As you're going into 2 to 3 quarters down the line, you're going to start seeing sustained PAT profitability. And according to us, that is really what's going to drive markets' way, stock performance a lot more than just technical factors.
Ashi, what about Nika and InfoEdge? They also form part of your portfolio, right? Are you throwing in the towel and kind of, getting done with Nika, or you're still continuing to maintain the patience there?
No, so absolutely not. We continue to be quite bullish on Nika over the longer term. So our strategy is kind of as a quasi-private equity strategy. We're really taking longer term positions in these companies. If you understand what's happening with Nika, right? Nika is underperforming currently because they had a big base of shops were closed. People weren't going to malls, so all purchasing was happening online. Now, as people are starting to kind of come back, you are seeing a shift away from kind of traditional shop, as in the shift towards online. Some of that is starting to move back towards kind of going back to normal shops and shopping in the mall. This is a temporary high base phenomena. So we aren't too concerned about longer term growth rates in Nika. India is a country of 130 crore people. There's only 1 crore annual transacting users on the Nika platform. Nika has tremendous reach in tier 2, tier 3, tier 4 kind of towns. These towns are starved in terms of BPC products.
You don't think competition from Tira could be an aberration?
So competition is a bit interesting, right? As in you have Reliance coming in, you have Tata's coming in. There is going to be a lot of competition, but the important thing to understand is that online penetration in India is still at extremely low levels, right? So in a market which is growing that rapidly, you can have multiple players come in and existing players can still continue to grow. The thing with Nika, what we believe is that it's very difficult to replicate Nika's reach with the influencer network. A lot of kind of beauty and personal care kind of products are discretionary driven. You need people on social media talking about things. Now, that reach that Nika has built is something which is very difficult to replicate. And that's one of the things that continues to make us quite positive over the longer term, while it is one of the stocks currently underperforming, one of the few stocks.
But this bonus issue has left a lot of bitter aftertaste. The CFO resigns. I remember when Nika went public, it made Falguni Nair the richest businesswoman in India, right? It commanded a premium because it was cash positive. And here you have the biggest promising star has become really the backbencher. Have markets realized that she was trying to run before she could walk?
So a couple of things, right?
They're valid concerns,
right? These are very valid concerns. So I think the bonus issue is trying to be cute. Right, as in she is an investment banker, and you are kind of, and I don't think market participants like kind of being dealt with in that manner. So I think that was a negative perception. One important thing to understand, right, as in with Nika, when Nika was listed, Zomato, Paytm, all of these were highly loss-making.
Yes.
And none of them had a clear path to profitability. So Nika was really standing out very significantly. It was a Nika, there was an Info Edge, there was a Ease My Trip, a smaller, but very few digital platforms could actually make money. So when listed market participants who don't really didn't understand this new space were trying to value companies, it was a lot easier to value a company which was profit making.
Yeah.
As kind of Paytm and your Zomatos have all started moving towards profitability, and those that trend being a lot more visible, it becomes kind of that Tina factor. There is no other alternative factor. That actually kind of.
Why will you
goes
not
away.
buy Jio Financials? I mean, it's the biggest digital disruptor, right? Or you have already bought it.
So I don't want to talk about what we're buying or what we're not buying, but yeah.
I mean, isn't this like the go-to stock for anybody who's got a promise of a digital fund? Jio Financial has to be there. Like common sense. In India, you have to buy HDFC Bank and ICICI Bank or both.
Sure.
Right? It's like that.
So rather than commenting on whether we bought it, not buying it, and all of that, what we are really like looking at is across sectors, right? And you're very clearly seeing this in financial services. Transactions are moving online.
Yes.
Right? And they're moving online in a very big way. And what we've seen with Paytm, and Jio can really replicate that, and Jio's just, the Reliance Group is just excellent in terms of execution at scale. What happens is when you deal with a bank today, when you deal with an NBFC, the paperwork is sometimes just horrendously slow. KYC requirements, etc. Paytm can extend you a loan in a matter of seconds. No need for paperwork, no need for any of the other cumbersome processes. Jio is now going to be doing something similar. They will revolutionize the way lending happens, wealth management happens, etc., especially at the kind of lower tiers. So you will see a tremendous move. And I think really you will, Jio is definitely a very interesting company within the space. But what we do find interesting is it's not just finance. It's finance, it's consumer, it's eating. According to us, the reason what makes us so interested about digital as a theme, while it's a thematic strategy, it's a specific narrow thing, you're getting very good diversification at an industry level.
Outside of the new age tech world, where else do you find conviction in the market, or is it all looking too overheated to you right now?
No, so we are very comfortable in the large and mid-cap space. And when talking of mid-cap, I'm talking of the larger mid-caps. You are looking at a very strong foundation for growth over the coming decade. And India is really kind of standing out from a global context. I think you're seeing a lot of soft power also starting to emerge with the kind of success of the G20 and various other aspects, our space program, etc. So there's a very strong foundation for growth outperformance in India over the coming decade. And you probably have small and mid caps, specifically kind of probably you've seen a very sharp rally. And it's that space that we are a bit concerned about. But when you're looking at larger space, I think banks have started to move after some amount of time. You're still getting very high quality banking franchises, which are growing very sustainably at about 15 to 20%. And you're getting them at reasonable valuations of between 1.5 to 3 times book. So that's a space where despite markets being at all-time highs, you're still seeing visibility of growth at the right kind of valuations. As the global economy starts kind of recovering, IT stocks also offer fairly decent value. Consumer in India has never been cheap, right? But you're seeing such a strong headway for growth in terms of consumer spends over the coming decade. Globally, you've seen something that anytime an economy has crossed a $2,000 per capita income mark, there's been a huge increase in discretionary consumption spends. Right now, so when you're looking at companies with valuations at about 50, 60, 70 times, it becomes quite difficult to understand why you should pay those valuations. But what they are kind of capturing in is this potential explosion of growth that people are kind of expecting may happen over the coming kind of decade as discretionary spends start to rise. So when you're managing large and mid-cap kind of money, I think there are enough pockets of kind of interest which are out there. Capital goods, according to our certain pockets, you can still kind of effectively go in. There is a very interesting longer-term theme which is emerging in terms of a value chain shift away from China towards various economies, and India is really going to benefit as part of that. Now, this is something which, given the sheer scale of manufacturing which has the potential to shift, right, and various kind of programs, the cut in corporate tax rates, PLI incentives, various other kind of programs to kind of boost manufacturing.
Sure.
So you're starting to kind of see a foundation for growth, probably similar to the 2002 to 2008 kind of bull market that we saw in India. You had a lot of factors coming together that could drive growth. And you're really seeing that foundation starting to come together. And I think that is where you're seeing these high levels of optimism in India and markets being at an all-time high, even in a time when there are enough headwinds around, right? As in you have.
Right. No, point taken. And this is a discussion we're just having with the management of RR Kabul as well in terms of the kind of manufacturing push we are seeing. But just wanted to shift focus away from that a bit and talk about pharma because that's the other space which is doing quite well. Naresh, come in here. All the stocks, the likes of Suven Pharma, Ajanta Pharma, Polymed, Granules, Glenmark, Oro, the list really is long and very, very heavy volumes at that, at least 3 to 15 times the usual average. What's your top bet?
So I would go a little contra here. I'll go for Biocon, which is trying to make that move about 275. So that is one which looks promising in terms of risk reward. So I would expect this to go towards 330 levels in the short to medium term. So Biocon is the first pick. Second is to continue to focus on Sun Pharma. The reason being the stock has come back to 1150, 1200, where it was back in 2015, where the cycle topped. So if this can sustain, then this could continue towards much higher levels. And given the low beta of the stock and a relatively lower volatility also on a daily basis, this looks promising as a defensive bet. The rest of the names, it's become tough after such a rally in Glenmark and Aurobindo Pharma to bet. The risk rewards don't look great, but the trend is still positive for a lot of them.
Before we wrap, please explain it to everybody. क्या हो रहा है?
So I think it's just optimism being carried
That's
away,
it.
right? As in it's you've seen this in capital goods, you've seen this in defense, you've seen this in railways. There is a clear story.
I'm
right?
yet to meet anybody. I'm yet to meet anybody on the channel who says buy railway stocks. But somebody is buying them today. See, they've recovered. Somebody is buying them, they've recovered. So all I'm saying is that if the fundamentals are so off center, why is somebody buying them?
So see what happens is I think it's not just railway. I think it's the market construct at this point in time. What you have seen is, I think in the last interview with ET now, we were discussing what shows a point when you're starting to see small caps peak. What you have is a clear disconnect happening between valuations and the story. And especially in a period where growth is a bit impacted, right? And in the current with inflation, consumer growth is weak, the global growth is weak. You're seeing that impact in IT capital. So where are you seeing growth? The entire market starts moving towards that in a big way. As a bull market develops, you have more and more people going towards isme paisa isme ban raha, move towards that. Right? So you're not going into something because of fundamentals or valuations, you're going into something because it's moving up. So I think you're kind of seeing that, and obviously this is not very sustainable, and which is why I think a lot of people, like you're saying on the channel, struggle to explain it.
You know, we're describing the bull market in like a train journey, right? One of our favorite examples, Ashi. If this bull market is a train journey, but in this case, I never thought that the bull market will be in train stocks. Trust me. You know, if the bull market is a journey, I used to ask Rakesh Junwala that, okay, where has the bull market reached? And to give a smart answer. We have asked everybody. But I never thought that the bull market will be in railway stocks.
No, but you know, part of it is reality. We were just chatting today with the Texmaco management, and they had earlier given a target of 700 to 800 wagons per month by the end of the fiscal. They said next month onwards we'll start clocking that because there's so much, you know, a capacity addition. They're getting to raise funds, and there's the need.
But all of this is factored in, right?
Yeah,
As in,
of course.
it's you are factoring
I'm just
that
talking
and
about
more.
the pure fundamentals, yeah.
No, but I think there clearly is. There clearly is fundamentals improving in railways, in defense, but just markets getting
overexcited. Okay, Ashi, great to have you on
Thank you so
in the
much. It was a
studio.
real
Thank you
pleasure.
so much for taking the time out. Let's